And it's 1 p.m. on a Thursday. That means it's time to do 55 minutes of business on Business Incorporated. You're welcome to the program. And here's what we have for you for the next 55 minutes. Global clean energy investments to hit 2 trillion naira in 2024. $2 trillion, beg your pardon. And Kenya has decided to keep the rate unchanged at 13%. Kenya's rate is still at 13%. And then in Zimbabwe, there's a protest by civil servants. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa, and we start, as usual, from the global space. Oil prices extended gains on Thursday with support from growing expectations of an interest rate cut from the United States Federal Reserve in September, even as the upside was capped by an OPEC Plus plan to increase supply and higher U.S. inventories. Brent crude futures traded up 57 cents, that's about 0.7% to $78.98 a barrel, while U.S. West Texas Intermediate crude also gained 62 cents, that's about 0.8% to $74.69 a barrel. Oil benchmarks rose more than 1% on Wednesday, recovering after sliding by nearly $8 a barrel over the 5 sessions through Tuesday. Nearly 2/3 of economists are now predicting that the Fed will cut interest rates in September. And separately, Saudi Arabia cuts its official selling prices for July crude, and falling Middle East crude benchmarks and weaker profit margin for Asia refineries. Meanwhile, the U.S. crude stocks jumped 1.2 million barrels in the week to May the 31st, while analysts had expected a drawdown of 2.3 million barrels, according to data from the United States Energy Information Administration. Let's see metals now. Gold firmed on Thursday as the dollar and treasury yields retreated on rising bets that U.S. interest rate cut may start as early as September, while investors are waiting U.S. non-farm payrolls data. Spot gold was up 0.8%, $2,373.31 per ounce, after rising 1% in the previous session. U.S. gold futures rose 0.7% to $2,392.80. The dollar index was down 0.2%, hovering around a near 2-month low, and benchmark U.S. 10-year Treasury yields lingered near their weakest levels in more than 2 months. Hiring by U.S. private employers slid to a 4-month low in May, adding to signs that the job market is cooling. Markets now look forward to the NFP data, which is supposed to be out by Friday, for further clues. Other metals now. Spot silver rose 1.8% to $30.54 per ounce. Platinum was up also 1.2% to $1,003.95, and palladium gained 1.2% to $942.75 per ounce. Still in the global space now, investment in clean energy technologies will climb to $2 trillion this year, almost double the amount spent on fossil fuels. This is according to the International Energy Agency. 2/3 of the record $3 trillion will invested in energy sources in 2024 will be devoted to sectors such as renewables, electric vehicles, nuclear power, grid storage, and efficiency, even as higher financing costs hinder projects. The Paris-based agency said that the remaining $1 trillion will go to coal, gas, and oil, a level that's still too high to conform with global climate goals. Now, combined investment in renewable power and grids has overtaken the amount spent on fossil fuels for the very first time. Some green projects have been impeded by rising interest rates, but this has been offset by easing supply chain pressures and falling prices. Solar power is leading power sector's transformation, with investment in the area set to reach $500 billion this year. And that's more than the money flowing into all other electricity generation technologies combined. Total investment in renewables and nuclear power for electricity generation has reached 10 times the amount directed at fossil fuels-fired generation. China will account for the largest share of clean energy investment, with around $675 billion this year, as a result of strong domestic demand for solar power, lithium batteries, and electric vehicles. Still, clean energy investment in other emerging and developing economies remains low at about $320 billion, accounting for just 15% of the global total. All right, once again on Business Incorporated, we have to redirect our DSTV viewers to our Federal Capital Territory in Nigeria. That's Abuja. Day 7 it is of commissioning the project. Today, it's the commissioning of roads B6, B12 and Circle Road in Abuja Central area, and it's around Independence Avenue at Ahmadu Bello Way in Abuja. So for our DSTV viewers, let's head to that where that commissioning is taking place. But for our other viewers on other platforms, we'll continue right here on Business Incorporated. And we'll continue with the Fidelity Bank PLC. They've concluded all necessary arrangements to raise a total of up to 127.1 billion naira by way of rights issue and public offer. The plan culminated in a signing ceremony between Fidelity Bank and issuing houses at the bank's head office in Lagos. Obviously, this is towards the recapitalization which the banking sector in the country will be going through in about 2 years.
Subsequent to CBN's recapitalization circular published on March 28, 2024, and shareholders' approval, Fidelity Bank PLC takes a bold step towards achieving the revised minimum capital requirements for Nigerian commercial banks. This informs the coming together of the board chairman and other board members of the bank, heads of issuing houses, and other professional partners to append their signatures to documents that contain the MOU that will enable them work together on the capital raising exercise. In a combined offer, Fidelity Bank hopes to increase its capital base with over 127 billion naira through rights issued to shareholders and a public offer.
The funds raised will enable us to expand our business franchise, improve our IT infrastructure, and render better customer service experiences. We are confident that these investments will solidify our position as a leading financial institution and unlock even greater value for our shareholders.
Stanbic IBTC Capital is the lead issuing house to the combined offer.
They've heard the story. They've seen, the benefits and the return that shareholders in the bank they've been getting over the years. The offer also, provide them the opportunity to come and be a partaker of this good performance and good returns.
Fidelity Bank says it is the first among a full-fledged financial institution to undertake rights issue and public offer in its recapitalization plan.
Today we held our signing ceremony of our rights issue of 3.2 billion shares at 50 kobo each, and it's coming in at 9.25 kobo, and also for the public offer of 10 billion shares at 50 ordinary shares at 50 kobo each, and that's coming in at 9.75 kobo. And this shows that we understand the market and the Nigerian economy at large.
Besides Stanbic IBTC Capital, other joint issuing houses include Iron Global Markets Limited, Carry Asset Management Limited, Afrinvest Capital Limited, and FSL Securities Limited. Others are Future View Financial Services Limited, Iroko Capital Market Advisory Limited, Kairos Capital Limited, and Planet Capital Limited.
Well, that's Fidelity Bank, and I know that other banks obviously will be following that path in the coming days. Now let's shift our attention to the issue which is very high on the minds of a lot of Nigerians, the fiscal policy reforms. The Taiwo Oyedele-led Presidential Committee on Fiscal Policy and Tax Reforms has proposed 5 executive orders to accelerate fiscal reforms and revive Nigeria's economy. These 5 are part of about 450 policy recommendations by the committee to improve Nigeria's revenue profile and create a more conducive international competition and business environment. The executive orders, some you see on the screen, we will delve into now as we have himself, the chairman of that committee, Mr. Taiwo Oyedele, joining us virtually for this conversation. Mr. Oyedele, good to have you on the program. Good afternoon.
Good afternoon. Thank you for having me.
Awesome. So we've seen a whole lot you have done, and I guess it's also a good time to correct that impression because the executive had to share a statement to say some of those reforms were misconstrued, like it's already been approved by the executive. I'm sure you've also seen that story as misunderstanding, I believe, going on in the media, and I think that has been corrected at this time.
Yeah, that is correct. So the proposals are still being finalized and also reviewed internally. So the version that was circulated is not authorized. And so therefore, we should allow the time that is needed for those approvals to be done. And then once the official version has been approved, that will be communicated officially. So I think we should hold further conversations on those unofficial copies.
All right. So now let's talk about the official copies, your reforms, your proposed reforms. And I'm wondering why you capture these ones as executive orders. What is the process to make it implemented? Perhaps it is shorter. That's why you decided to capture them as executive orders.
Yes, so I think the priority for the government at this time is economic stability, particularly inflation, but also to do with exchange rates, GDP growth rates, creating decent employment. And so what we're trying to do is to support the fiscal authorities in their effort to complement what the monetary authorities have been doing and other policies of government, including trade, to quickly achieve those economic stability. So the reason for putting some of those measures into executive orders is to be able to speed up the implementation of those policies. Of course, we have quite a number of other policies and recommendations that are not in executive order format. Some of them are by way of regulations, and quite a number of them will be implemented via amendment to the laws and enactment of new laws, which of course, after the internal approvals, have to go to the National Assembly, and then with public hearing and all the other processes that are involved before they eventually become enacted into law.
So the VAT has been of interest to a lot of Nigerians. You said it should be an exclusive list. There's also the tax waivers. Help us to understand what you're trying to achieve with the issue around VAT and tax waivers.
Yes, as you recall, we've always had issues with VAT. And the more recent one was about a year or 2 years ago, when we had these back and forth between some states and the federal government as to who should collect VAT. So the view we have taken from the Presidential Fiscal Policy and Tax Reforms Committee's perspective is to look at what is the best practice around the world, particularly in countries where you have a federation such as Nigeria. And our conclusion is that the priority has to be what is good for the people, what is good for commerce, business, and development. And the conclusion is that you cannot be collecting VAT at state level. You may be able to do that with a sales tax regime like you have in the US, but we do not have a sales tax regime. We have a value-added tax regime. In fact, we've seen places like the EU where in fact they decided that they did not even want to administer VAT at the country level, and they are doing it at the regional level. That's because they recognize that VAT can easily be a big impediment to trade, but if you also do it well, it can facilitate economic growth and development. So that approach is what we want to recommend for Nigeria to adopt. Of course, you would imagine that beyond even putting this in the constitution, you also need the buy-in of not only the federal government but also the subnational, keeping the ultimate objective in mind, which is we want to recommend what is good for our country and for development. At the end of the day, everyone will benefit if we do the right thing for our country.
Then you did say you're using the carrot and the stick approach when it comes to VAT, because while you are asking that some basic items be exempted from that, you are also trying to at least buffer revenue for the government on the other side.
Yes, so the idea is that VAT impacts directly on the prices of goods and services. And so you have to take so many things into consideration. One of it is you do not want to tax poverty. That's a commitment that even Mr. President has made. And you have to then ask yourself, what are those basic things that people have to consume just to survive or have, basic things of life? Of course, that would include food. Food is the biggest component of how households in Nigeria today spend their money. And then you're going to think about accommodation, transportation, and of course, education and healthcare. So our view is that on those 5 basic needs items, we need to reduce the VAT. Some of them have VAT in one form or the other. We think that we need to reduce the impact of VAT. And what that would actually mean is majority of our citizens will see a reduction in the prices of those goods and services. But that would also mean that there will be a decline in government revenue. The other thing we also are proposing is for businesses not to carry the burden of VAT, because what happens is when you place the burden of VAT on businesses, they pass it on to customers by way of higher prices. All forms of taxes on businesses are indirect taxes on individuals. That's the way it works. So we're also proposing allowing businesses to claim input credit for their VAT, whether it's on assets, on goods or services. So the combined impact of reducing the VAT burden on businesses and reducing it on the basic consumption that affects majority of our population is that government revenue will go down. Therefore, there will be a need for an upward adjustment of the rates on other items that are not in this category to compensate to some extent for the revenue that government will be losing as a result of the reforms.
The other side of that is for the revenue. I know sometime I think you got hit by some platforms, media platforms, when they said that you were asking that VAT be increased. Maybe you should explain that.
Yes, I think many people just like to either misrepresent the issues, or they just want to sensationalize, and some people just enjoy bashing anybody that's trying to do anything to help the country just because they're unhappy with the government. And we don't take those things personal. We only just appeal to people to try and understand the issues and then engage with those issues constructively, because if we make it hard for ourselves to do the reforms that are necessary for our country to move forward, we all will bear the consequences if we continue with business as usual. So what was misreported was a reporter decided that they will only just focus on the need for an upward adjustment in VAT rates. And of course, more than 90% of people would not read the content, so they just went with the headline. And it was also deliberate for the reporter to do that just when everybody was complaining about cybersecurity levy. So they just dumped it into the midst of all of that. But we moved on from that. We reached out to the reporter who apologized for the misreporting. And for us, we are focusing on going forward rather than the past. So, but I think the explanation is simply what I said before. We want to make prices of goods and services more affordable on the basic needs for the majority of our people. And therefore, if you make an adjustment, what you also accomplish as a result of that is you make your VAT system to be more progressive, whereas it's asking for, where it's going to be asking for people with more ability to pay a little bit more. And those without the means to pay, we're asking them to pay less. So, and I think that's the right thing that we should be, encouraging at this time.
Yeah, another proposal in that is subsidizing transport for low-income staff, and I'm just thinking of how do you want to get that done, because we did see the issue of subsidy brought about buses from the federal government, but I mean that wasn't a solution that lasted. So how do you see this working?
Yes, government can do a lot, CNG and other initiatives, but you also have to always bear in mind that there's still millions of Nigerians that will not be able to benefit from, those interventions. And therefore, particularly from the private sector side, so for us, we thought it would be necessary to make recommendations to the government on interventions and measures that can be more broad-based and far-reaching to cover for almost anyone, whether it's a small business or large business. And the whole idea is because of the subsidy removal and the impact on inflation, as well as for flotation of the naira, we've seen increases in general prices, particularly on transportation, which is also affecting logistics and cost of goods and services. So we thought that if any employer wants to do a subsidy or provide transportation, means for their staff, or to give them any allowances to help them cope with the impact of these rising prices, such employers should be encouraged by way of additional tax relief. So it's almost like government saying, we want to share the burden with you as you're trying to help your employees, knowing very well that those employees are indeed the Nigerian people that government is concerned about in terms of their welfare and well-being.
All right, just before I let you go, I need for you to talk about this proposal of, you said FAC or the revenue to government should be shared daily and not monthly. Right.
Yeah, so these are also ongoing conversations and proposals from our committee. The whole idea being that the current way in which revenues are shared, usually done on a monthly basis, in itself creates some sort of economic distortion. And sometimes you see a spike in inflation or exchange rates just at the time of sharing those revenues. We think that we have the resources, both in terms of human capital as well as infrastructure and facilities, including technology today, to be able to design a system where whatever revenue is collected into the federation account belonging to different levels and tiers of government can indeed be credited to the accounts on a daily basis. So that way they also have regular inflow of funds to cater for the needs of their people at the state and local government level. And then you don't have the spike in liquidity that is pumped into the system over just a very short period of time. And more importantly, that would also then free up the time for the commissioners of finance across the state, and whether by extension the governors, to focus more on strategic fiscal policy issues, rather than focusing on how to share FAC on a monthly basis. Of course, there'll still be a need for reconciliation, because like you normally do with your banking engagement, is to do reconciliation and there'll be plus and minuses here and there that have to be done. Those things also don't require the commitment and time of the most senior people in government, who should be dedicating their time to governance and policies to move the nation forward.
So looking at this executive order that you proposed, what can we expect? Do we have an idea of the timeline? What's the process, before this become implementable?
Yeah, so we are not a policy-making unit or organ. So we're only just we were engaged or appointed by Mr. President to help with recommendations. So, and that is what we have done. But we're going beyond that to also work with the policymakers to fine-tune those recommendations for them to be able to approve them. So ordinarily, what we'd expect will happen with an executive order is because it has to do with fiscal policy. We have to get the approval of the finance minister. And of course, some of those recommendations border on issues where you need working together with even the central bank. You need some of them with Ministry of Trade. You need some of them have to do with customs, FRS, Ministry of Agriculture. So that engagement process needs to be robust enough to get everybody to buy in and support those proposals. And once that is done, it will then go to Mr. President for the final approval. Once that is done and is gazetted, of course, in the midst of all of that also, you need the Ministry of Justice. Once all of that is done and is signed by Mr. President, is then gazetted, and then it commences from the effective date as contained in the order. So a bit of a journey. I will not want to commit to any timeline because I try not to commit to anything that is not within my control. But I can say that the policy authorities are fully committed to getting this done as quickly as possible.
All right, Mr. Tao Idele, Chairman, Presidential Committee on Fiscal Policy and Tax Reforms, thank you so much for your time.
Thank you for having me.
All right, those reforms will affect you and I, affect our pockets, affects the price. I mean, imagine if VAT is removed on the food and all of that. It will certainly affect all of us. Let's take a break now. When we come back, we'll head to the market. Ahead, ECB has gone the way of the Bank of Canada. And Nitya will be here with that and a whole lot more to stay with us. Welcome back to Watching Business Incorporated right here on Channels Television. We'll head to the markets now. Anita comes in with fresh news from the European Commission. We hear they have cut their rates. The second one yesterday was Canada. Today is the ECB. And BOE is meeting today. I wonder what they would do.
Well, of course, whenever the ECB and the BOE, you call them the big three, as well as the Fed, whatever decision each one of them takes, the others would always like to follow suit. So, and this time, it's most expected that the US would want to toe that path, because already the markets were already pricing in that the ECB would cut the interest rate, and they very well did. They did that by about 25 basis points, down from 4% to 3.75%. And this is the 4% was held at that record since September 2019. So that's it. Most likely.
Yeah, US maybe September, but we'll see. Anita, I think you have.
It just might give you that surprise, which maybe might come against your expectation. So, but we talked about the ECB, but let's go on the home front and on the African soil, where Nigeria's stock market has gone back into the red. It's still oscillating all the way from the green position, which it closed yesterday at 0.24%, which was the first gain coming after 2 days of consecutive profit taking since the month of June started, the trading week of June. So, but the market had successfully closed Wednesday's trading session in the green, led by 18 gainers against 23 losers. But at intraday, it was down 0.17%. This number is still changing onto the closing hour of about 2:30 Nigerian time. For for the stock exchange on the South African soil, or the JSE, we saw a 0.64% increase at intraday. That number is also changing. On the other side of the African continent, we see Egyptian stock exchange, the EGX 30, down by 0.71%, while Kenya's stock exchange was up, that's for Wednesday, at about 0.1% for Wednesday's close. And now let's move over to the fixed income market. Yesterday, we saw the very first primary market auction being carried out for the fixed income market. So now for the results of that PMA auction, NTB PMA auction, let's talk to Favor Agbamuche, fixed income dealer with Providence Bank. Thank you for joining us, Favor.
Thank you so much for having me.
Okay, so now we know investors are so much keen on Nigeria's fixed income market, particularly Treasury bills market. Now, give us details of yesterday's proceedings and the result of the primary market auction carried out by the central bank. Okay, so at yesterday's auction, we saw that the DMO sold a total of 278 billion out of the total subscription of 718, although the amount on offer was about 221. But we saw stop rates still hover around the same levels. We've been seeing the same rates for the past 5 auctions that the DMOs had. We've been seeing stop rates hovering around the same level. So the 1 year stop at 26.7 as opposed to 26.9 at the last auction. And on the mid tenor, which is the one is today, stopped at 17.5 compared to the 17.449 of the last auction. And then 16.5 maintained on the 91 days. Okay, so Favor, before I just let you go, just in 30 seconds, what do we expect for the market? It's currently intraday, but what do you expect for the fixed income fixed income market, Treasury bills and bonds? Okay, currently, as at today, based off of auction of yesterday, we're already seeing a bit of resistance as regards the rate. Right now, we're seeing stop rates, bids. We're seeing bid rates being quoted slightly above stop rates. So stop rate of 20.67%, we are seeing bids at 20.80. We expect this trend to continue. It's going to be bullish because everybody wants to sell off and take. It's going to be bearish rather, because everybody wants to sell off and take income off of the NTB auction of yesterday. And also remember they floated OMO on Tuesday. So we expect this trend to continue, seeing that there's also another auction coming up next week. Okay, thank you so much, Favor, with that information about the fixed income market, particularly as far as market auctions are concerned. We very much appreciate your time on our show. Thank you. Dr. Favor Agbamuche, fixed income dealer with Providence Bank, with information of the fixed income markets, INI. So I sign off on that.
Thank you so much, Anite. We head straight to London, where we wonder what the Bank of England is doing or has done, because they also have their meeting today. Are they under pressure following interest rate cuts by Bank of Canada and also the European Central Bank? Juliana joins us to tell us. Hi, Juliana. Good afternoon. What's going on? Any conversations you've heard?
Good afternoon, Innie. Well, the Bank of England will be meeting on, I believe it's the 14th of June. Of course, we know their monetary policy meetings happen once a month. So we've got 2 more weeks, I'm afraid, to wait for the interest rate decision. But look, I was listening to the discussion you were just having with Aniette there, and I'm sure the mood music among the Governor, Andrew Bailey, and as well as the Deputy Governors is, if an interest rate cut is good for our European partners, then perhaps an interest rate cut is good enough for us. And of course, we know businesses are desperately waiting, and those who are bearing the brunt of higher borrowing costs, they want to see a lowering of interest rates, even though, of course, even if they do cut it in the next couple of weeks, it is going to take at least 2 or 3 months for the full effect of lower borrowing to take into fruition. But I think the fact that the ECB have done it just a couple of minutes ago is a really good sign. And if you actually compare and contrast some of the data of what's been happening in the Eurozone compared to what's happening in Britain, this island does appear to be doing much better. Now, the Bank of England's target rate for interest rates is 2%. I believe the last set of figures came in, it was at 2.3%. So we're just a smidging above, the ideal position. But in the Eurozone, interest rates in the month of May came in at 2.6%. In fact, inflation, it actually went higher than what was expected. So all of the indicators do suggest that when the monetary policy meet at Threadneedle Street in 2 weeks' time, so in 2 Thursdays' time, that perhaps they will cut interest rates finally because inflation is going down. Quite interestingly as well, Inni, the inflation data for the month of May is coming in on the 11th of June, which is just a day before the Monetary Policy Committee meet. So that data is going to be incredibly important. But already Citi analysts have it down that inflation will come down to about 2.1%, which is a pretty good job done by the Chancellor of the Exchequer, might I say, because of course, just a few months ago, inflation in this country was at 11%. The fact that it's come down so low is, pretty significant.
Yeah, and I know that the political sentiment will also be feeding into decisions. Election is just July 4th, so I'm sure all of that will color the conversations around that. But let's look at the market at this time. How's that looking?
Yeah, the market's in tip-top shape at intraday. You mentioned the election. I didn't manage to speak about the election. Quite shocking. And that's because it's paused slightly, the Tetchy campaign, because, of course, we know world leaders have gathered in Normandy to mark 80 years since the D-Day landings, which is pretty significant, actually. The worst loss of soldiers in any war in history, according to those who record history. So Rishi Sunak is there with President Joe Biden and Emmanuel Macron. So it's all paused now. Nobody's really talking about the UK election, but we have had some positive data from PMI. I spoke to you yesterday, Inni, about the services sector. Of course, 80% that contributes to the GDP of this economy. So really important. That came in positive for the month of May. And we've also got some positive PMI data out of manufacturing and construction. That's really cheered investors and intraday. So if we have a look at the blue chip index, it's up 0.33%. The FTSE 100 up by 0.34%, and the FTSE 250, that's also up by 0.31%. In the currencies market, the British pound is currently trading down against the US dollar by 0.06%, down 2 against the euro by 0.09%, and down against the Japanese yen by 0.01%. Inni.
Thank you so much, Juliana. Well, talking elections, EU Parliament elections begins today. So while on the one hand, the European Central Bank has cut rate, their selection going on, parliamentary election going on. But I heard that the conversation there has to do with figures like the interest rate. We have Chiponda Chimbelu now join us to tell us conversations going on that's determining the choice of voters. Hi, Chip. Good afternoon.
Well, if we look at the election campaigns, it has been dominated by security and defense matters. And that, of course, is due to the ongoing war in Ukraine. But across all the EU 27 member states, opinion polls show that economic and social policy will influence how people cast their ballots. What is interesting is that migration doesn't appear to be playing a decisive role for voters in most countries. That is despite the focus on the topic in politics and media. The economy appears to be front and center. The post-pandemic economic recovery here in Europe has been bumpy, largely due to the economic fallout from the war in Ukraine. And of course, governments are trying to raise defense spending at a time when their economies aren't doing well. Now, that has meant that spending for social services and welfare has not been rising, and that may be leaving many voters dissatisfied, especially given the fact that we saw record inflation levels in Europe last year. The last 5 years have been challenging for the EU. Britain left the EU at the beginning of 2020. Then came COVID-19 in 2020 as well. And then Russia's ongoing war in Ukraine started in early 2022. Now, all of that was unprecedented. It will be interesting to see what voters make of the Parliament's work.
Well, let's turn to the market now, see what investors are doing.
European stocks are expected to make gains today, Inni. That is, of course, mainly due to the expectations that the European Central Bank will cut interest rates for the first time since September 2019. Analysts expect the ECB to lower interest rates by 25 basis points, and that will bring down the key deposit rate to 3.75% from 4%. And in terms of economic data, German industrial orders for April are due. Now, they will help provide insight on how Europe's biggest economy may be doing in the second quarter of this year. And markets will also be on the lookout for Eurozone retail sales data and initial U.S. jobless claims later in the day.
All right, Jim, thank you so much for that. I'm sure we'll be getting reactions following that interest rate cut. Now let's come back to Africa, and we head to South Africa, and it's still elections. Election is an election year today, this year, isn't it? Well, we have Innocent Semosa joining us now in South Africa. We did tell yesterday the GDP shrank 0.1%, but that's a quarter-on-quarter, first quarter. But the PMI was actually, well, fair. 50.4 from 50.3 on a positive trend, and we know that the fever of election and the results are still going on there. Innocent, good afternoon and welcome to the program.
Good afternoon, Inni, and good afternoon to our viewers around the world.
Great. So what's going on? A mixed bag to the PMI, slightly positive, the GDP for first quarter down, and then election results and all the conversation. What's the mood like? What's the economy feeling like at this time?
100%. In fact, it was a shock for many economists when they saw the GDP figures dropping to 0.1%. And you would remember that this is a setback from the strides that were made in the last quarter of 2023, where it was about 0.3% uptick. And of course, we are seeing it now dwindling. The likes of mining, manufacturing, really struggling to produce. For an example, they're talking about issues around the power cuts, the issues around weak demand that have really, caused a strain to this particular sectors. But also, we've seen the likes of agriculture really coming up strong with 13.5%, which is, a big improvement given the fact that previously agriculture was impacted heavily by the likes of El Nino. You would know that in the Southern Africa region, there's the drought El Nino that is affecting the likes of Namibia, Zimbabwe, and some parts of South Africa, of course. So even the statistician general yesterday, he made a point that it is indeed not sustainable, the growth from the agricultural sector, given the climate change, because it depends on how much rain you get, how much sunlight you have in terms of producing those crops in it. But again, I can tell you now that it has been a mixed bag of feelings from different economists with regards to the GDP numbers.
Yeah, and I'm sure the results from the election is also being awaited. Where are we on that?
Please come again.
The election result. What's the state at this time?
Yeah, so at the moment, the conversations are taking place behind closed doors. You would know that there was no outright majority winner in this election. So the ANC is looking for a coalition partner. So there are many options here. There are many moving parts, the likes of the Democratic Alliance, the Economic Freedom Fighters, and the newly formed MK party of former President Jacob Zuma. But we are hearing talks that the Democratic Alliance, which is the main opposition party in South Africa, is currently flirting with the African National Congress. And that has raised a lot of discontent from the ranks of the African National Congress, particularly in the tripartite alliance, where some have threatened to leave the African National Congress if in an event when if the ANC goes in a coalition with the Democratic Alliance, they believe that a coalition with the Democratic Alliance will reverse the gains that have been made since the dawn of the democracy. But also we heard from the economic freedom fighters saying that they can work with the African National Congress, but they've got conditions. They want President Ramaphosa to resign, and the second one is that they want a control of the finance department portfolio, but also they said that they want to have a say in who becomes a Speaker of Parliament. So the ANC they're in a very, very much compromised position at this point in time. The position are happening.
Yeah, sounds like very interesting days ahead in South Africa from the political scene. But thank you so much, Innocent Semosa, for always keeping us on top of the news.
All right. Thank you, colleague.
All right, now let's head to Zimbabwe, where it's a protest. Civil servants there are protesting against the government's decision to deduct United States dollars from their salaries, arguing that it further impoverishes them. The move, in line with a circular from the Public Service Commission, aims to backdate deductions to January. However, civil servants view this as fraudulent and challenge the unilateral decision, demanding meaningful consultations and adjustment to their salaries. Various unions and associations, including Progressive Teachers Union of Zimbabwe and the Amalgamated Rural Teachers Union of Zimbabwe, are criticizing the move, emphasizing the dire financial situation of workers in the country at this time. Still not good for Zimbabwe, right there. The World Food Programme is predicting a potential increase in livestock deaths in the country in the coming months, surpassing last year's figures. Livestock conditions are fair to poor in many areas in that country. Additionally, we see that Zimbabwe factors contributing to the rise in the livestock deaths include limited veterinary services, declining pasture quality, and water scarcity also affecting that. In East Africa, Kenya, the Monetary Policy Committee has opted to keep the central bank's interest rate unchanged at 13% following its June 5, 2024 meeting. And this decision comes against the backdrop of improving forex rates and declining inflation, signaling a positive trend for the nation's economy. MPC noted that recent fiscal decisions have improved the economic outlook, stabilized foreign exchange rates, and dropped inflation. And just before we head to the crypto space, still in Kenya, it's a good one for their PMI. Fuel prices reductions coupled with a stronger shilling led to a drop in import costs, further pushing down overall input prices in May after the first decrease in nearly 4 years in April. And so the Stanbic Bank's Kenya's Purchasing Managers Index rose to 51.8 in May, and that's from 50.1 in the previous month, indicating further improvement in Kenyan private sector. Let's see if there's an improvement in the crypto space, led, of course, by Bitcoin, and announced by Ladi Williams.
Yes, definitely. So much happening today. ECB cutting rates today. So now, all eyes on the US Fed and the Bank of England this time. But let's look at major stories right now in the market. We say crypto trading activity, that fell by 20%. Market is second month of a drop. That's in trading volume across exchanges. That's according to data from CC data there. And that means that post halving, we've seen volume drop right there in the market. That's trading volume. Then Robinhood is set to acquire Bitstamp, another crypto exchange. And this acquisition will bring Bitstamp's globally scaled crypto exchange to Robinhood with retail and institutional customers across the EU, UK, US, and Asia. Then, right here, we see 16 members of Congress, including Chairman of the House of Committee on Foreign Affairs, Rep. Michael McCall, penned a letter to President Biden and State Department officials, including Secretary of State Antony Blinken, asking Biden administration to repatriate Tigran Gambaryan, the executive at Binance that's held right here in Nigeria. It's one of the world's largest cryptocurrency exchange. Let's bring in Obinna Iwuno, now President, Stakeholders in Blockchain Technology Association of Nigeria. Great to have you on the show.
Good to be here.
So we have word now from the U.S. House Republicans demanding return of a crypto executive detained by the Nigerian government. How do you see this playing out?
Well, I think that what the U.S. Senate and the government is doing is what every country would do for its citizen. Okay, so from possible scenarios that may play out would probably involve a dialogue between both governments, right, to see where the issue is and possible areas of mediation and coming to an agreement that serves justice to both parties, right? So even if the citizen has committed a crime, it is still in the rights of their country to reach out to know the status of their citizens. So this is not per se that what the government is asking for is right or that what our government is doing is wrong, but both governments has a way to determine the possible outcome that is most suitable for parties in this case.
All right, definitely we'll be expecting dialogue between both countries at this time. But let's look at crypto regulation in Nigeria. It looks like it's stalling a bit right now. Have you noticed any progress so far with discussions with the acting SEC Director General?
Well, I believe that we are awaiting a lot of positive outcomes because the acting Director General of the SEC is one who understands the digital asset sector. In fact, he could be said to be a pioneer of the digital asset, sector in the SEC because he's one of the first persons whom we started engaging with, as far back as 2019, 2020. So he understands this space, and I believe that he is working, very hard to see that the right regulation is achieved for the space. And we have also sent in our suggestions and recommendations on areas of improvements for the regulation to make Nigeria to become that choice destination for virtual assets, service providers, operators, businesses, and even traders alike, right? So we are very hopeful that this current management of the SEC is going to get it right, and the sector will receive that positive and right regulation that would help it to grow into an industry.
All right, definitely. We'll keep watching to see how it all plays out. Thank you so much for joining us, Obinna Iwuno, President SEBAN. Thank you so much.
Thank you for having me.
Right. All right, so there you have it. The U.S. Republicans there asking for the Binance executives
asking for their citizens.
Exactly.
Their citizens.
Yeah.
I mean, it's a normal thing, and I think, as your guest said, we expect both governments to dialogue and come to a compromise.
Definitely. So much to watch out for.
Thank you so much, Ladi. Well, that's it on the program. You can get this experience again when you go to our YouTube channel, especially for our viewers from DSTV. You can watch the full program on our YouTube channel. I'm Ini John Mekwa. I'll see you later tonight for the Stock Market Report. Do have a great day.